Asia-Pacific firms see sustainability as growth, but capital still favors policy clarity as 61% cite future opportunities as the key driver. To discuss this, we have on the line Joe Filan of WBCST, Prabodha Acharya of JSW Group, and Patrick Ho of Swire Properties. Welcome, Joe, Prabodha, and Patrick. Let's start with what's happening. Why does capital still chase policy clarity over sustainability ambition?
First of all, capital is looking past sustainability ambition from companies and actually now looking for credible transition plans. Ambition alone is not enough. Finance needs to understand what are the investments that are being made and what are the changes to a company's business model so that the company will be able to protect and create value as it transitions to a climate-impaired, carbon-constrained environment. And policy clarity that supports demand growth and supports investment are really important for planning. We're observing that those markets which combine clear policy direction, the infrastructure to scale investments, and demand creation are creating the conditions for much stronger long-term investment confidence.
I think I agree with Joe in the sense that sustainability ambition is important, but the large-scale capital allocation depends on confidence and predictability. So investors, if you look at, they're increasingly convinced that sustainability will create long-term competitive advantage, but they also need visibility on policies, regulations, infrastructure, market signals that support this involvement. If you look at, we come from a hard-to-abate sectors like steel, energy, and manufacturing. Investment in decarbonization often have long payback periods. So business can manage technology risk, but uncertainty around policy framework can slow the investment decision. So clear and stable policy reduce risk, lower the cost of capital, and accelerate deployment of low carbon solutions.
From the corporate perspective, capital chases policy clarity over vision because policy clarity is sending a very clear market signal business needed to make the decision of capital allocation to sustainability. And without such a reliable rulebook, I would think corporate ambitions could only be stated aspirational. Allow me to share the China and Hong Kong markets where my company manages most of our real estate portfolio. And the 30-60 dual carbon reduction goals are how now putting hard constraint, shaping every sector, including real estate. And the new model tackles whole life carbon on operational and embodied carbon from the design stage. And market mechanisms are also upgrading, including things on national carbon market is expanding and renewable power trading is also rapidly growing. That's why capital moves where policy leads.
Now that you've mentioned that, Patrick, what should a strong transition plan even look like for Asian businesses right now?
Sure. I think a strong climate transition plan for Asian business today, from what I observe, comes down to 4 key pillars. That is science-based decarbonization targets, robust governance, real financial commitment, and a full life cycle approach. I think all these tie together with transparency and accountability. First, target setting that is based on climate science is important, and that goes beyond just an aspirational net zero goal, but a verified decarbonization pathway that is aligned with a 1.5 degree scenario that is approved by reputational organizations such as the Science Based Targets initiative. And second, you need robust governance and accountability. Climate responsibility must sit at the board level with climate KPIs tied directly to senior executive compensation. And this sends a very clear signal. This isn't a side project. It's core to how business is operated. And third, you'll have to back it up with finance. That means allocating significant capital expenditure for climate-related projects, establishing an internal carbon price across organizations, and also securing a meaningful share of financing from green sources to support your transition plan.
From my perspective, a strong transition plan is no longer an emission reduction roadmap. It is a business transformation strategy. So it starts with clear long-term goals, but it must also include near-term actions, capital investment and allocation, governance structure, and measurable milestone. And that will make a transition plan right. A credible plan should show how the company will improve its efficiency, increase, say for example, our perspective is renewable energy use, strengthen circularity, deploy new technology, and create a long-term value along with reducing the emissions. So for Asian business, if you look specifically from the subcontinent perspective, transition plan must balance three objectives simultaneously: growth, affordability, and decarbonization. So this balance has to be brought in. The most successful companies in the transition I've seen are integrating sustainability into core business practices. This is a planning rather than treating it as a separate ESG add-on.
I absolutely agree with them both. I think the build I would have, if we take this business transformation strategy remark that Praboda made, I think what a credible transition plan does, and it's really important for businesses across Asia, is first, there are significant changes happening to our environment, to the availability of nature, and also in our societies. And a credible transition plan shows that the company understands the risks and opportunities that these changes create and how that business is going to continue to be profitable as it navigates these changes, both how it mitigates these changes and also how it adapts to them. But crucially, it integrates responses to climate, to nature, to social priorities alongside the adaptation and resilience piece. I think it's important also because a credible transition plan will show the trade-offs that are required, the opportunities and the investments that are needed. But this is also aligned with what investors are looking for when they're analyzing companies and making investment decisions. These are the kinds of elements that they're really looking forward. Yeah, thank you.
And so if we look at the bigger picture, Joe, is sustainability driving strategy, or would you say it's more of just compliance?
I think that's a really old view. Compliance is never differentiating. And I think that today businesses are looking at how sustainability is driving corporate performance. And there's a strong example of this in the Business Breakthrough Barometer, this year's edition, where one of the respondents talked about the investments they'd made in electrification through identifying that as a priority through their transition planning, which meant that when the LNG price crisis hit their market, they were ready to adapt quicker to renewable energy than their competitors. So really, this is a competitiveness agenda. This is a value creation agenda. This is a corporate performance agenda. And, all companies, of course, need to be compliant.
I completely agree with Joe. I think at least for the leading companies and corporates like us, sustainability has clearly moved beyond compliance. It has to give you business opportunity as business strategy. And compliance may be the starting point, but sustainability is increasingly influencing right now about investment decisions, innovations, business resilience, and long-term growth strategy. For example, in our group, when we started looking at decarbonizing, we found clearly having renewable energy is both financially lucrative and it is reducing emissions. When we make steel, we create a lot of waste products, and that used to really pollute the land. So we created a business called JSW Cement, where we started using those waste products to make low carbon cement. So we really created greener, cleaner materials. Similarly, I think Joe talked about the electrifications. From an Indian perspective, we import a lot of energy, but our transport sector need to really change, and we need to depend on the resources that we have in our country. So renewable energy is available. If we move towards the clean mobility, that becomes a win-win situation. That is the reason JSW is actively now pursuing clean mobility in both mass rapid transit systems, electric vehicles, in buses, trucks. So these are happening. And that is why I say the most forward-looking business sees sustainability as a source of competitive advantage.
Echoing Joe and Padota's messages, from the Swire Properties perspective, we see it sustainability needs to go beyond compliance, and it has to be integrated well into the business strategy and operations. And that's the only way to deliver real business value and drive competitive advantage. And taking the real estate sector in China, Hong Kong markets as an example, we're seeing many industry reports shows that across many first-tier cities, certified green buildings in our sector, they may command higher rent and asset value premiums relative to uncertified brown stock, for example. And our own estimates from the company also suggest that energy efficiency certified green buildings could add hundreds of millions in value in Hong Kong dollars through tenant retention And secondly, cost efficiency is equally compelling. But it's not just about the numbers that I'm trying to illustrate here. I think a forward-looking sustainability strategy that strengthens partnership is important to enhance a resilient value chain that help a company positions reinforced as a future-ready business, and that also foster a purpose-driven culture that align with employee values, with the corporate goals. So when sustainability delivers this kind of tangible business benefit, I would think it's not just compliance, it's strategy. And that's how we build a more resilient, competitive business for the long term.
Thank you so much for sharing your thoughts, Joe Prabota and Patrick. Hope you can all join us again soon. Once again, those were Joe Filan, Executive Director for Asia Pacific at the World Business Council for Sustainable Development, Prabota Acharya, Chief Sustainability Officer at JSW Group, and Patrick Ho, Head of Sustainable Development at Swire Properties. For more news, visit esgbusiness.com.